My guest today is James Freudigmann, co-founder and director of PMC Property. James completed a property degree in economics. He's a registered valuer, a qualified investment advisor, and since starting in the industry in 2007, has been a estate manager and a national manager before starting PMC with his business partner, Will Hosking, in 2014. James, welcome to the show.
Thanks very much for having me, Nath.
Awesome. Well, we've seen a lot of things happening in the marketplace, particularly with CoreLogic's recent data showing growth is starting to slow, sentiment waning. What are you seeing out there on the front line?
Yeah, look, especially here in Brisbane, Nathan, I think there's a sort of a bit of a two-speed market in some parts of it. We've sort of got your end product, nicely finished properties ready to move into. You've still got a lot of demand for properties like that, and they're holding value very well. And then you've got the second tier of the market, which is more properties that need a lot of work. You're needing something that needs a renovation or a knockdown rebuild. And there's definitely a waning demand for that with that volatility that's around in the media about construction prices and can you get a builder and things like that. So as a whole, the market, I think, is actually holding up surprisingly well. We haven't really seen a massive pullback in pricing at all thus far.
Awesome. And you talked about the Brisbane market. Maybe for our viewers out there, explain what sort of markets you're working in and the type of clients you're dealing with.
Yeah, mate. So PMC is a national advisory business. So we look after home buyers and those trying to build a property investment portfolio. So we actually in our business track the 32 largest population bases around the country, and we transact in 14 of those markets. So we've got we can be genuinely area agnostic when it comes down to buying property for investors. It really has to come down to where we think they can actually make money and at what stage of the property cycle they're actually investing in. So a lot of the markets around the country, I mean, there's no denying what happened last year is a phenomenal year, but the stability of the quality markets is sort of what's really putting some areas ahead of the rest so far this year, and those that hadn't got as far through the cycle. So areas like Perth, Adelaide, Brisbane, Sunshine Coast, Gold Coast, Toowoomba, all of those markets are probably just on or just under halfway through their growth cycle. Areas like Canberra, Melbourne and Sydney, they seem to have sort of come right near the peak of their market now and starting to see a bit of that correction phase in the market.
How do you think the fear of missing out played out in the peaks and the elevated growth we've seen in the last sort of 12 months, particularly in 2021?
Yeah, it was, I think the last time I was, I guess, privy to being a buyer's agent in a market like that was in Brisbane in 2007, where it just was still going pretty much at a similar sort of pace it was running last year. So that fear of missing out just really, as the market got stronger and stronger, people's mentality was just, I have to get in. And so they were just paying whatever it actually took. So it didn't really sort of overinflate the market, in my opinion. I think it's just the natural trajectory as you build momentum within a growth phase. And then Christmas was that breather for people to reset their expectations to what's coming in the year ahead. Knowing there was a federal election coming up was probably the biggest thing on people's mind at that stage. Interest rates, I think, was still not expected from a lot of people until 2024, 23. So that's probably caught a few people by surprise. But I think you normally see when the market corrects a little bit, that fear of missing out was a top 3 or 4% that gets added on at the end of the market. And that's normally what gets pulled out when the market slows down.
Definitely very interesting. And you talked about the peak of the cycle. So we know property goes through, peaks and troughs of the cycle. There's predictions out there that the market's going to drop by 25%. There's other predictions out there saying that we've hit a generational high in 2021. What do you sort of say to those that are out there a little bit worried, maybe running through the property cycle and how that works and how this is all pretty cyclical?
Yeah, I think it's a bit of a, you sort of have to look at it as an investor or a home buyer. For a home buyer, at the end of the day, the cost of living is naturally increasing, as we can see anyway. The cost of rental is going up and through the roof at the moment due to that limited supply. So getting into a housing market, whether it's good, bad or indifferent, home buyers are the ones that will still be buying. So I would say to home buyers, it's over the next 6 months is probably not a bad time to try to get into the market if you can. There will be a few more sales agents who are feeling the pinch. They're not getting as many sales as they were last year. It wasn't coming as easy, or it's not coming as easily now. So there's a little bit more power in the buyer's hands now to negotiate. From an investor perspective, it really comes down to the reasoning behind your investment. I think if you're a long-term holder, it still is very important to select which market you're buying into. You're unlikely to go and want to buy into Sydney and Melbourne right now at the peak of the market, because you could have 5 to 7 years of that stagnation and correction phase. Whereas if you're getting into other markets like Southeast Queensland and Adelaide and Perth, you're still in markets that we believe still have upside over the next sort of 3 to 5 years.
What do you say to, I know outside of your buyer's agency services, you've got your property management side of the business as well. So have you seen a squeeze on your owners in terms of the costs and needing to pass out onto their tenants? And do you know what, maybe explain why that's happening?
Yeah, I think, to be perfectly honest, Nathan, the pass on of higher rents now really comes down to your property manager, not quite so much the actual owner themselves. I'm sure there's some landlords where obviously they're feeling the pinch of interest rate change, so they want to be able to pass that on. What we look at as a management business is, can we get the highest price for our landlord, but still maintain that we're getting a quality tenant? We're not reducing the pool to a very limited supply. So we're recommending to a lot of our landlords to increase their rents at the moment. Some are 5%, some are 15% if they've had a long-term tenant that's now moving out. It's all really sort of suburb and asset dependent, but there is a significant growth phase that is coming into that rental market right now. We manage just over 700 properties here in Brisbane, and we only have 4 properties that are even for rent. Everything else is occupied. We've seen substantial increases in rent this year, which last year we weren't seeing quite so much. But people don't need to be too scared of that. You naturally have in the property cycle, you'll have your capital growth phase, and then you'll have your rental increase afterwards. So the yields become reduced, and then they catch up a little bit more. So that's really what we're seeing at the moment. The concern probably for a lot of renters moving forward is that there's such a limited supply coming out of the ground. The last 2 years of COVID, no one's been building. People are worried about, if I go and I can't get finance and funding, so I'm not going to do a larger scale apartment complex or townhouse complex. So that shortage of supply, in my opinion, is probably going to be around for the next 3 to 4 years.
Definitely. No, that would be interesting to see how that plays out. And I guess with that knock-on effect, how do you see that playing out for the next 12 or 24 months in the property market? Do you think there is a two-tiered economy between Sydney and Melbourne doing one thing, and maybe, you know, our other states such as Brisbane, Adelaide, Perth, maybe getting that growth side of things? Or what do you see it play out in the next 12 to 24 months there?
Yeah, a lot of it comes down to the affordability, to be honest. So when everyone looks at Sydney and Melbourne, and even if you're not living there, it's a bit hard to look past the prices that are going on there. So I think it's more going to be a squeeze on affordability over the next couple of years. So those markets like Brisbane and Adelaide and Perth, where it is a lot more affordable for people to still get inner city housing and apartments to an extent, I think we'll see a better growth phase from those still over the next few years. That gap has been, or it is at the moment, probably wider than it has been for many, many, many years in the past between all the other capital cities versus Sydney and Melbourne. So that gap will come back towards a little bit more of a normal historical average, probably over the next anywhere from sort of 2 to 5 years, I would imagine.
And how do you think, we've got the Olympics coming up, I think it's 2032 in Brisbane. How will that help or hinder not only the Brisbane market, but the rest of the other states in Australia?
Look, I think the Olympics is a great thing for Australia as a whole, to be honest. The amount of people that come, if they come to Brisbane for the Olympics, they're probably likely to make a good holiday of it and travel to Sydney and Melbourne and Perth and everywhere else as well. So I think it's fantastic for our economy. For Brisbane, I guess the beauty of having it here is the amount of money that will be invested into infrastructure over the next 10 years will be substantial. That's great for job creation. The awareness of Brisbane on the international stage is a big thing for Brisbane. Commonwealth Games a few years ago for Gold Coast, and now this into Brisbane, Sunny Coast and Gold Coast. So I think what it does for the Brisbane property market it gives us longevity, whereas we could have the phase of our growth cycle finish in the next 3 or 4 years, but then you've got a major event that is going to have construction sector ramp up in the lead up to it, because developers will want to build new product and know they can sell it. So there's likely to be a little bit more supply come on in the late 20s, early 30s. It'll see better transport nodes, it'll be upgrade of roads. So I think it's a huge benefit for Brisbane's property market, because people will see it as there's a secure end for the next phase as well.
Excellent. And with the clients that you're working with, it would be great to understand how you run through finding the right opportunities for them. And for our viewers out there, what type of clients you're sort of working with and how they can sort of, understand your process.
Yeah, absolutely. So we, as a buyer's agency and a property advisory business, we do about 65% home buyers and about 35% property investors. So home buyers, it comes down to people who are time poor, or they're concerned about negotiating. They don't want to make a mistake. They hate real estate agents is a big one. So we really look at what is going to work for them as a home. If what they desire is not quite achievable in the suburb that they want, we'll provide them with other options and recommendations on what provides a similar lifestyle, but it might be a suburb away or 2 suburbs away, things like that. We want to make sure clients can actually get into the property market at a good price, and be really comfortable that they haven't overextended themselves, but they haven't also been too conservative that they end up regretting buying something where if they knew they stretched a little bit, they'd be a lot more comfortable. So for us, it's really about understanding who the client is and what works for them in a property, spend a lot of time with them on that, and then getting out there to find opportunities. So we do a lot of off-market transactions, which helps people with time to make a decision, gives a bit more flexibility on settlement and moving and things like that as well. So that's the home buying side. The investment side, it's about, as I said earlier, where can you make money and what cycle is each of the markets in? So where should you be buying? So we really sort of look at that national footprint. We look at a client's overall investment goals, and then we'll put a strategy in place depending on what they would like to acquire over the next 3, 5, 10 years. And then we'll work towards that with an annual check-in and going through it that way.
How do you help? So you talked about you work with a lot of home buyers. How do you help home buyers that are feeling priced out of the market, a little bit jaded? They've been searching in certain areas and found that that price has really pulled them out of being able to achieve what they want to achieve. How do you help them get their goal of home ownership in the same area that they want it? Is it simply looking at a different area, or what do you sort of do in that situation?
Yeah, so sometimes it just depends on a personal preference, really. Like there are times where naturally you do get priced out of a market. Like there's some suburbs I'd love to live in and I go, I can't quite afford it. But I think it's not so much being a reality check for our clients, but it's reassuring them that if they were to go into this next suburb, if we're looking at historical growth and we're looking at the potential upside that they will generate out of their home, because at the end of the day, it is the biggest investment anyone will ever make. So naturally, people want to see their home grow in value. But the most important decision for most home buyers is lifestyle. And we want to make sure that if you can't achieve it in that particular suburb, don't be jaded about that. Maybe you just haven't considered these other options, and we'll give them a few streets and we'll say, look, drive around these few streets. Here's what's in this suburb and why we think over the next 3 or 4 years, it's really going to change. Areas that are gentrifying that they may not have been aware of, a suburb or 2 away. So it's really about an education process without saying what you want can't be done, because a lot of the time it can. It just comes down to having the access to the right properties and being willing to not be scared about the decision they're making. Like our job is not to buy a property, it's to give our clients all the information to make an informed decision. And then if they're really comfortable, our job is then to negotiate hard and buy it for them. So yeah, it's a tough dynamic, but it's such a rewarding experience as a job at the end of the day.
No, 100%. And how do you manage those, or how do you respond to clients that might say, well, I'm just waiting for the right time. I feel like now is not the right time. We're seeing rates go up. I'm going to wait another 6 months and maybe the property market is going to go further down there. How do you sort of respond to that?
Yeah, that is a A super common question at the moment, Nathan, is going, maybe I'll just wait and I'll see what happens. I think the important thing is about you can wait 3 months and buy in 3 months, but if you're not prepared to buy, then you're probably going to miss out at that point anyway. So getting their finance right, getting that in order, understanding their borrowing capacity is number one. If they've got that, we're saying, if you know you can buy it and we know you want to buy a home, then if we start the search, get yourself ready. If the right opportunity comes up, you can jump. You're just not rushing the process. If clients come to me and say, I have to buy a home in the next 6 weeks, I would generally say, guys, I cannot guarantee that because the right opportunity might not come up. But if you're ready to buy and the right one does come up, away we go. So if people say, I want to wait till the end of the year, my advice is that, and I personally think that over the next 3 to 6 months, we'll see a little bit more pain in the housing market. And so I think there will be genuine opportunities for buyers to get a good deal. But I think once we cross the end of this year and people are more used to interest rates, then there's that turn in the market. So no one can ever pick the bottom of the market or the absolute top. I think as long as they're ready and informed, then it might take a few months to buy, but instead of waiting, you're better off starting your search and just being prepared.
Definitely. Yeah. And we saw that with COVID. A lot of industry experts were predicting a 30-40% drop. The exact opposite happened. So I guess no one's got the crystal ball. It's really difficult to understand where things are going. James, did you have any final words? And then I guess after that, love to get you to tell us how we can find you as well.
Yeah, no, I think I'm probably, people look at me as a bit of an eternal optimist, I suppose, to an extent, Nathan, but I think what we look at for property is you've got to look back at history and see what it's done. And so in Brisbane, if people are buying here in Brisbane, the biggest drop Brisbane's ever seen in property prices is 6%. And that was in 2010 to 2011 when we had our floods. So going back 40 years, our biggest drop 6%. So if you're trying to time the market, you're never going to get that exactly right. And there's not a lot of downside there. And that's when interest rates were 9% and unemployment at 6%. So, mate, I think there's still good opportunities for people. I really do. And hopefully people don't get too scared by what the media puts out there, because looking at genuine historical data will give them a lot more peace of mind.
Excellent. And James, how can our viewers find you if they want to find out more?
Yeah, Nathan, anyone, our website's pmcproperty.com.au, and that stands for Purchase, Manage and Consult. So they're our 3 business lines. My mobile number's on there, my email's on the website as well, and our whole team's on there. So yeah, if anyone ever wants assistance or has any questions, they can grab us there.
Awesome. Well, really appreciate your time here today, and it's been a pleasure talking.
Likewise. Thanks, Nathan.